Hello, 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 and welcome back to another episode of TA with MK. My name is MK, and yes, that's right, I'm back for the third day in a row after taking a long hiatus of, what was it, probably a month and a half, trying to push some content out to you guys to kind of make up for some lost time, so to speak. So I figured I'd get another video out tonight before I head out to my Dart League that I do once a week. I'll give you guys an update in tomorrow's video on how that went. I'm not a dart shark, so to speak, but I'm not too bad at it, so I'll give you guys an update in tomorrow's video on how that went. But in tonight's video, or today's video, depending on where you're at, I want to quickly give an update again on the S&P 500. I'm going to use the ES1 or the E-mini futures chart to do that. We'll also do an update on the Bitcoin dominance chart, something we haven't spoke about for some time, but I was just looking at it tonight, trying to get a gauge of where money's flowing. What kind of upside altcoins could have should Bitcoin push higher, which of course we'll talk about Bitcoin briefly. Also want to cover a quick update on the total 2 chart, if that's something you haven't heard of. Of course I'll go over that when I get to that point. And then we'll wrap the video up by just giving an update on my CHAINLINK trade that I opened yesterday and spoke about in last night's video. If that sounds interesting to you, please remember to like and subscribe. Let's go. It's TA with MK. It's TA with MK. Okie dokie, so a lot to cover, so we're not going to diddle-daddle around. This is the ES1 daily chart, just something I wanted to give a quick update on if you didn't watch yesterday's video. We've been tracking this trend line that has been resistance ever since our top back at the end of 2021 on 1, 2, 3, and most recently 4 and 5 occasions. Also, we've pointed out in the last few videos that this 200 simple moving average, which is the yellow moving average on my chart, has been resistance most recently here, not most recently, but once here in August of last year, and then most recently it's had a hard time flipping it as support on these 2 recent occasions in December of last year, and then here just, beginning of December and late December. So essentially on 5 different occasions over the past couple of years, it's been resistance. We've talked about the potential of an upside move back up here to retest it yet again. Question is this the one time that we finally flip it to support, break out of this trend line and continue this way, or we met with yet another rejection? Now, the reason why I repeated all that, or the reason why I started out on this chart again, even though we talked about it yesterday, is I wanted to point out something that I didn't yesterday, and that's that if you're on the bearish side, or if you're of the belief that we're just going to have the same outcome that we have had, this would be one thing that could lead or give credence to that idea. And it's that if you just look at the stochastic, if you were to just go bare bones with the simplest form of trading and just say, hey, every time that there's been a pullback, if we go Alt V and put a line there on all these major pullbacks ever since this major downtrend, you can see if you come down to the stochastic, it's every time that this has peaked out up here, between 95 and 100 and curled back down, right? Same thing on 1, 2, 3, 4, and now we're working on what would be or could be a 5th occasion, right? Where we're at this maximum of about 100 on the stochastic, so it needs time to cool off. I mean, it can go sideways for an extended period of time, which would give the ability for price action to go higher. But if you're just going from statistics, and if actually we didn't do it here either, I'll be here, same thing, cross back down. The biggest thing is whenever this crosses back down into this blue area, you can kind of see that at least since the end of 2021, it hasn't been a good thing for the S&P 500, right? That being said, you can go back a little bit further to the whole uptrend, and during the uptrend, if we were to do Alt V each time it passed down there, it wasn't nearly as dramatic. You had this cross back down into the blue, and then look, price action just kind of consolidated for a bit, made another move higher. Same thing here, cross down into the blue. You did have a little rollover eventually, but higher. Basically, the pullbacks just weren't as dramatic during the uptrend. Of course, if they had been during the downtrend, which is natural, right? That is to be expected. But I just wanted to point out that until that trend is broken, not that it'll ever truly be broken. Typically, if the stochastic is maxed out, you're going to see some sort of a pullback. But until the trend of these larger pullbacks is broken, which basically means we need to be out of the bear market and into the next bull market, or at least some sort of a consolidation phase for the S&P 500, you have to be cautious as we approach this area, and as the stochastic is overheated, just because, you know, statistically speaking, at least for the past 2 years, this isn't really the time you want to be jumping into the market. If anything, this is the time to be taking profits, monitoring any positions you have closely with stop losses in place, and being ready for either a breakout and, you know, re-entry, or, you know, rejections and possibly shorting the market. Next up, we've got the Bitcoin daily chart on BITSTAMP. Just wanted to point out something real quick as I transition over to the total 2 to give an update. Now, if you look here on the Bitcoin chart on the daily here, like I said on BITSTAMP, I have this red zone where you can see the bull market top from back in 2017, where Bitcoin topped out, you know, just under 20K. You can kind of see that even its major rally right after that, before the capitulation, was as high as like 17,600. You can see that would be the bottom side of the zone, and of course the 19,000 about 500 is the top side of the zone. Well, as of right now, Bitcoin has lost that area as support that was acting as support between June of last year, again September, and it lost it, of course, last year at the end, you know, the middle of November, and now that area is acting as resistance. So that's something we'll monitor over the coming days and weeks, is can we flip back above the last market's all-time high of about 19,600, 19,800, and can we flip that back as support, especially this area up here where these daily 200 moving averages, which is right now at about 19,600 or so. If we can break back above that, then you could see a, a really sustained, larger, term run, larger term, a lengthier run, I guess is what I'm trying to say. Some sort of sustained midterm type of upside, rather than just choppy crap we've been dealing with for the past year, really. That being said, again, until it happens, you have to remain cautious and say, hey, until proven otherwise, we are at resistance. But I did want to point out that if you go to the total 2 chart, it has so far held what was the bull market top of 2017. For those of you that are unfamiliar with this chart, all it is it's just the entire crypto market cap excluding Bitcoin. Sometimes I talk about the total 3 on this channel, which excludes Ethereum as well, but this chart includes Ethereum, all of the altcoins. It just doesn't include Bitcoin. And if you look over here to the right, where it's showing that right now it's at about 480 billion, this chart is just saying that out of all the money in crypto, 480 billion of it is in Ethereum and altcoins, while the rest of whatever makes up the market cap is in Bitcoin specifically. The reason why I find this interesting is the question is, at this point, if you are a believer that the bottom is altcoins have shown some strength versus Bitcoin, at least for this bear market up to this point, because they've held the support, which was the top of 2017, which we broke above and flipped as support back during our bull run of February of 2021, before we clear up to here, obviously, to our all-time highs. As of right now, those prices, or at least this market cap, this level of support anyway, has held. Question is, will that continue? Now you kind of have this large descending triangle kind of forming here, where you can see that it's put in this high, first it had this low, then it had a high, then it had this lower high. Support level's been remaining the same up to this point, which is right around 430 billion. This is a bearish pattern, and the question is, especially for those that believe that maybe another or one final major capitulation is ahead, ahead of us, especially for altcoins, this would be something that would give credence to that at some point maybe this does break down and has some sort of a capitulation back down here to lower prices, kind of flushes out the market one final time, kills off all of your shit coins, so to speak. But in the short term, could we see a rally back up to retest this trend line one more time, at least, which is up here around 530-ish billion. It's also where the 200 moving average sits right now on the daily chart here. You can see that is what acted as resistance up here back in November of last year. So that's something that as we talk about the rest of the charts and give ideas of possibly short-term upside, at least for the next few weeks, possibly month and a half, this would be another chart that could support that, specifically for the altcoins. And next up, we've got the Bitcoin daily chart, just a quick update on kind of what Bitcoin's price action is doing. We're going to zoom into the 4-hour here in just a minute and kind of give some short-term ideas as far as what target I've been watching as far as taking profits on my link trade. But here on the daily, one thing that I'm seeing that's nice to see is that if you look here, this little red zone of resistance that I had here between about 17K and 17.2, 17,200. You could see that we were having a hard time flipping that as support. Here it was rejected. Here we went up a little higher, kind of consolidated. Did have a little pump up. This turned into being kind of like a bull trap. Lost that area again. Resistance, resistance all along in here. We finally are back above that again. Now the question is, as we kind of form what looks to me like a little bit of an ascending triangle. Now it's not perfect, and I don't believe patterns need to be. When I trade, you know, some patterns, obviously the more perfect they are, the easier they are to trade. But to me, patterns are more used just to kind of gauge what price action is doing, more than necessarily like exact breakout levels. I always say in my videos that the horizontal areas are more important to me. But this does tell a story, this ascending triangle. It's just a series of higher lows. It means that buyers stepped in down here at around, you know, under 16K, right? They had this little pump up, big sell off. Buyers were willing to step in a little bit at higher price, basically, rather than waiting for down here. Again, this was a little double bottom we talked about. And so the question is, are we going to see a break above this next key level of about 17,800 that we talked about in yesterday's video, and about 18,100 right between there? We need to flip this zone, which was support all back in here before this giant capitulation candle. We need to flip that zone back as support, which would also simultaneously be a breakout of kind of this not as valid but semi-valid falling wedge that I have here on the daily. You can see this upper trend line, lower trend line. I like seeing confluence in charts. So if this trend line were to be flipped as support at the same time as, of course, something like this horizontal zone with a volume spike, that would be something that would lead me to believe that this rally has more legs to it. Something like going up to 18,000, almost 19K, maybe even as high as 19,800. This, of course, we'll take this step by step. That's really not what today's video is about, but I just wanted to mention that this ascending triangle that's forming is something that I'm monitoring closely, especially as it approaches this resistance. And as we transition into the end of my video talking about my Chainlink trade update, you'll see why. Because ultimately, if we can't flip this and this, you know, is resistance yet again, just like it's been back here, you know, I would like to take some profits off the table of my Chainlink trade and then possibly look for some new entry ideas. Should we revisit back down here, you know, to 17K again as this triangle continues to fill up? Typically, a pattern like this, triangles that is, they don't break out till around 70 to 75% full. I would say right now we're about 65% full. I would think 70 be something more like around the second or third week of January. So we'll keep an eye on this pattern. If you zoom into the 4-hour real quick before we move on to Chainlink, let me go ahead and clear it up and we'll move over to the 4-hour chart. All right, now we're here on the 4-hour chart. And if you look here, this is the double bottom that I spoke about in yesterday's video, where you came down, bottomed here, kind of consolidated, wasn't able to break that resistance the first go around, came down, bounced at the same area. That's what makes a double bottom. Again, rejection, but eventually a breakout. Now, the one concern is that there wasn't a lot of volume. There, you know, you look down here on the volume. Now, this is Huobi's chart, granted. I probably should be looking at this on something like Binance, but you know, you don't see a very major spike in volume there. However, it has, at least in the short term, broke above that and flipped to the top side of this area that was also resistance up in here and a bunch of you know, support and all that, as support temporarily. So the question is, do we see a move to the top side of the range? The double bottom measured move was only about 17,600 like we talked about, which we're approaching, which just means it's time to be cautious, start taking profits on any open trades you have open, you know, especially move stop losses up, especially, I mean, things like that. Just start to manage your risk more carefully. At least that's what I do. As we wait to see, can we, number one, visit the very top of the range? Are we able to see a push up here to like 18,000? And then the bigger goal, can we actually flip that as support and start trending, you know, higher? So we'll give you guys an update tomorrow on all of this, but I just wanted to kind of keep this on your radar that that's what I'm watching. In the short term, let's go ahead and look real quickly at the indicators and just see. I would imagine we're probably a bit overheated. You can see here on the stochastic RSI that it's kind of printing a bit of a rising wedge, something that, you know, statistically has a higher probability of breaking to the downside, of course, just because it's in an uptrend and what goes up eventually must come down. Could we maybe see a small short-term pullback, maybe one more bounce off this trend line before we top out somewhere back over here? Definitely possible. That could give us the juice maybe for something like this where we retest maybe something like between 17 and 17.2, give you one last little entry for maybe this final leg up to here. Then the question is, at that point, you know, do we consolidate for a bit, let this cool off, and then we break out? You know, that's something that time will tell. But other than that, the stochastic looks like it could use a little reset here on the 4-hour chart. So yeah, in the short term, if you were to ask me what I think could possibly happen, maybe we see a little push up to that 17,006. At that point, definitely some sort of a retest of anywhere between 17.3 and maybe 17.2, and then, you know, maybe we have one leg higher before Bitcoin, you know, ultimately has to decide what direction it's going to go for the remainder of January. Oh crap, I forgot I was going to sneak this in real quick, which I'll do real fast before we end up on Chainlink. This is the Bitcoin dominance chart. I'm not going to give an explanation of exactly what this chart means. I do have a link, or I do have a video that I've put out in the past that really dives into Bitcoin dominance. I'll leave that link in the description for you guys if this is a new chart to you. But basically, generally speaking, if this is going up, it's typically bad for altcoins, and if it's going down, it's typically good. There are more nuances than that. It's not quite that black and white, but, you know, generally speaking, that's the case. And so anytime this is pumping to the upside, that's usually a bad time to be holding on to altcoins. Anytime it's down here near this, so anytime it's pulling back, sorry, that's usually good. So you can see that ever since we entered this giant range back in May of 2021, you can see we've had this bottom side act as support. Anytime that's bounced, once again, bad for altcoins. This up here in the upper end has been resistance. Anytime this has went this way, this has been our epic altcoin seasons. Epic altcoin season, you know, smaller altcoin seasons. Our most recent epic altcoin season in summer of last year wasn't quite as epic as this one back here, but pretty darn close. And then now we're just kind of consolidating sideways in a little bit more of a tighter range. Still same area of support, but we have a little bit of a double top right here starting to play out. If, you know, this continues to play down to at least the neckline, which would be another bounce right around here, we could see something like a pullback between 41% back down as low as just, you know, 40%. And while I realize a 1% move isn't much, and it could go as low as like 39%, 1 to 2% move isn't much, but on something like this could mean that, going back to our total 2 chart, that you may see something like this, where this is able to push up to that trend line we talked about when we zoomed in earlier, and mentioned the idea that we could see some upside out of the total 2 market or the altcoin market. These two things have confluence together if this is able to continue to trend this way. What we don't want to see, of course, is something where this breaks back above this neckline up here and we start trending up here somewhere, because this will spell at least short to mid-term doom for altcoins, most certainly. But right now things do look a little optimistic, so we'll follow up on this chart over the next day or two, but I just want to put it on your radar. Alrighty then, and we'll go ahead and finish up with the 4-hour Chainlink chart. This was the trade that I opened in yesterday's video, and I will put the link, not the link, the image on the screen again, just kind of showing my entry as well as my targets. Now, if I look over here at my notes, the targets that I had that I mentioned in yesterday's video, which are on the more aggressive side, which I'll explain in just a second, but target 1 was 642, target 2 674, target 3 687. Now I'll kind of show you where I got some of those areas as far as my measured moves and horizontal resistances, but I wanted to also just give a quick note that my stop loss at this point I have moved up. To me, on these 4-hour time frames, we've, at least in the short term, flipped these moving averages and the upper end of this zone as support. There's confluence there that we really need to hold this level. We really want to see these moving averages continue to act as support, as well as kind of the top side of this previous range of blue, which is right down around $6, right? So what I've done is I've taken this wick here that goes down to about 597, and I've put my stop loss at 593.8, so I'll update that on the screen for you. It's a lot closer to my entry. It's still one that I feel like gives me a little bit of leeway should price action decide to have just a quick wick to the downside, but ultimately, if we do not hold these as support, this is not a trade that I'd want to be in at that point, right? All that being said, nothing else has really changed on my trade up to this point, but just a kind of a quick update on these target areas that we spoke about. Now, if you look here on my chart, I have these red boxes or red rectangle areas that are zones of resistance. These are basically the areas where my targets are. The underside being the more, I guess, conservative target, the upper side being the aggressive target. But all these are just areas that were previously, in this case, was resistance. resistance back in here, then the top side was support, then, you know, it lost that area and then created a new zone. Now, the underside of that is just under 640, and the upper side is as high as 645. So this is just kind of the middle of that. My target one, 642. Now, if the underside of that, you know, is to be hit, the safe move, I suppose, if you're in this trade and you want to be a little more conservative, would be to take your profits there. So something like 637, go ahead and take anywhere between 25 and 50%. I plan to take 25% there. And then at that point, you want to bump your stop loss back up to break even, or at least that's what I plan to do. Target number 2 at 674 is just kind of an average between the bottom side of this 670, upper side of the almost 680 of this next zone up here. Again, if you want to be more conservative, as soon as it hit just under 670, so something like 686, go ahead and take another 25 or 50%, and then bump your stop loss just under this other, you know, previous zone that you took profits at. I don't bump it up right to it, just because there could be a chance that you see something like this, where it breaks above, flips, goes up, hits this target, and then comes back and hits like the top side of this zone. You know, so I'd do my stop loss at that point somewhere up here in the 635-ish range. And so I'll just kind of keep you guys posted on that. But I just want to let you know that this is kind of where I'm getting my targets. Ultimately, my high target is the confluence between this measured move of this large falling wedge that's on my chart. Go back here where it broke out. Actually, I like to do where it retested. You can see that that's right up around 690. I would front run that a little bit at 687, you know, especially where $7, which is a pretty big mental number. We want to stay just enough below that, because if Chainlink is to rally up that high, you're going to see a lot of profit taking there. So typically with my final target, that is where I'm more conservative, just trying to make sure I get the trade closed out in good profits. But the confluence there is, again, this just has areas back here that was resistance, up here was resistance, you know, so you just have a lot of confluence of resistance or support back in this area of around $7. So that's where I get target 3 from. So I'll continue to update you guys on Twitter, tomorrow's video as well, on kind of how I'm managing this Chainlink trade. But this is just want to quickly let you know kind of where I sit on things now and where my new updated stop loss was. Thank you so much, my friends, for stopping by. On your way out, feel free to leave a comment. And as always, if you haven't already, please remember to like and subscribe, and we'll see you tomorrow. It's